this is Letitia Togba, CPA with LAT CPA firm. Talofa and aloha. This is episode 1 of Free Q&A with the CPA. And the question that I'm going to address is how do you get organized as an entrepreneur? And this is for if you've just started, if you're a new entrepreneur, or if you've already had some business coming in and your business is moving in a fast pace and you're trying to keep up with everything. All right, so this video is going to cover 5 free or low-cost ways to get organized in your business. Starting with number 1, utilizing the Business Frog Profile Checklist. Number 2, if you do not have an accounting software, utilizing the Business Expense and Sales Tracker spreadsheet. Number 3, listing out your tax deadlines. Number 4, time blocking your to-do list. And finally, number 5, using an accordion file folder to organize the documentation and backup that you've been collecting for your business. Please join my Facebook group called Free Q&A with the CPA in order to download the files for numbers 1 through 3 for free. And with that being said, let's dive into our first free or low-cost way to get organized in your business, which is number 1, utilizing the Business Frog Profile Checklist. Let's get started. You can see here, this checklist is called the Business Frog Profile. And if you can see it's copyrighted, it's because it's coming out of a page of a book that I'm writing. So FROG stands for Foundations, Revenues, Operations, and Growth. So it is a comprehensive list, but it doesn't include every single thing you have to think about. But this is a good starting place. All right. For those of you that are just getting started, foundations is really where you're at, right? So you're thinking about your business name, you're deciding whether you're going to be a brick and mortar, or if you're just going to have an online shop. What type of products or services are you going to offer? Is it going to be a blend of both? Usually in the service industry, you see that a lot, where the main offer is a service, but there's other products that complement that service that you're offering. Thinking about who your target client or customer market is, that's really important, because if you don't know who exactly you are targeting for your business, then when you do marketing, your marketing is just going to be all over the place. So you really have to think, who is the one person that you are searching for to sell your business offerings to? What do those clients look like? Where do they shop? What can you do in order to reach them? What kind of message would reach them? And another thing too, why or how is your company different from your competitors? So in competition, you have to think, what am I doing differently that gives me an advantage over my competitors? What advantage do they have over me? And what can I do in my own business to make myself stand out from others? Customers vote with their dollars. So why do you deserve the dollars from your customers? Why should they spend their money with you? Business plan, you'll see that a lot. And it's basically a plan that details what your business is about. So another thing too is a business plan is important, especially if you're seeking financing by way of going to investors or going to a bank for a loan. They're going to ask, most times they will ask you for your business plan so that they can see on paper what you are going to do with your company, how you're going to get customers, and how are you going to pay that money back. That's very important to an investor. How do they get their money back? How do they get a return on the investment that they made in you? And then when it comes to testing and proof of concept, when you go to investors asking for money, they're going to ask you, like, have you done any proof of concept? Have you made any sales? Have you tested this in the market to see if people are willing to buy it at that price point? Is there any proof that this is a viable business idea? Because an investor wants to know, again, am I going to get my money back? Are you going to be able to pay the minimum payments on the loan that you want to take out with my bank? If I'm an equity investor and I get a share of your company for investing $25,000 or however much money they invest, they want to know, like, am I going to see any profits from your business? If you want Shark Tank, you should be familiar with this, because the sharks do this all the time when they're asking and grilling entrepreneurs about their business ideas. So let's move on to revenues. What I want you to focus in on, though, is the customer acquisition process. If you haven't started, you have to think about, from beginning to end, what does it take after I market to get my customers in the door or to my website to make a purchase for my product or my service? What does that whole process look like? And the important reason you should map the process is that it also tells you what technology or equipment you have to purchase, what other things you have to buy in order to facilitate that process. So for instance, if you are not going to have a brick and mortar, then you need a website. If you're going to be processing credit cards, you need a credit card processor, right? There's machines, just like when you go into Walmart or you go into Amazon and you enter your card information, there is some sort of technology that is made to process that card payment. If you are selling actual products, what branding or labeling are you going to put on your products? If it's small enough to put in a bag, are you going to buy generic bags, or are you going to have your own bags made? Like, these are different things that you think through, and even thinking about your budget for those items. Can you afford to do that? Okay. And then the customer retention process. What can you do to retain your customers once you acquire them? Okay. What's going to be your follow-up policy, your refund and cancellation policy? What are things that you can do in order to make sure that your customers are still satisfied? How can you acquire more customers by keeping your customers happy and pointing them to do reviews and testimonials on your website or on Google? So for this block of items here, prices for your products and services, break-even analysis, profit margin, and profit goals, something that I want you to consider. So as an accountant and as a former teacher, I used to teach beginning accounting classes at a local community college. Usually entrepreneurs, they really didn't consider like pricing as like a science. And the reason why I say that is when you think about what you should charge for your prices, or what you should charge customers, most people just think, okay, especially if it's a product related price, this is my product, right? I'm selling cakes for $25. It takes me $15 worth of ingredients to make that cake. So I make $10 of profit. Now that's a simple way of pricing, but I guess the downside of doing it that way is that you've only factored in your ingredients. You haven't factored in the time it took you to bake that cake. You haven't factored in all of your other overhead costs that you incur in order to bake that cake, the tools you have to purchase, the equipment, the electricity you're using. I mean, part of pricing science is looking at all of your costs and factoring that into your base cost in order to figure out what profit margins you want to see. And I know that sounds kind of like mystical and magical, but there's a way to do that. And it's something that I'm going to cover in a separate video. So break-even analysis, if you've never heard of that, it's really finding your break-even point in sales. Like, how many cakes do I have to sell to break even to cover all of my costs, right? And then, of course, profit goals are easy because you're like, oh, I want to do 100K, I want to do 1,000,000. But there's a way to find out how many units of sales you have to make in order to hit that goal. Your profits are dependent on your efficiency as a business owner, and driving your costs down. It also depends on if you're ordering things in bulk. Lots of times you can get things price per unit at a cheaper cost. So there's a lot of different factors that go into profit margin. Okay, let's go into operations. For operations, we're talking about your business formation. Are you going to remain a sole proprietor? Are you going to be an LLC? A different partnership. There's general partnerships, limited liability partnerships. Are you going to be an S corporation or a C corporation? Are you going to be a nonprofit? And then you also have to consider federal taxes, state taxes, any license or permits, and then other matters of legal compliance that are attached to the business that you're forming. Federal taxes have to do with, most of the time, is going to be like income taxes and payroll taxes. State taxes, you'll see sales tax, franchise and use tax, excise tax, state unemployment tax, and each type of tax usually has a deadline and has a specific form that you have to fill out and submit, and then a dollar amount that has to be submitted with it. Federal taxes, it can depend, like with your payroll taxes, the form that you have to do a quarterly return and an annual return, but payments can be due. So by return, that's just the form that you're submitting, but payments can actually do monthly, semi semi-weekly or next day deposit, depending on how many taxes from your employees you've taken. So that depends, and the amount of employees you have determines how much taxes you have to, withdraw and are able to submit to the IRS. Copyright, trademark, patent, insurance, and business protection. That have created something that should have a patent or a trademark or copyright on it. Really research that and go to the government's website to look into that. And then protecting your business, liability insurance. Does the services you offer, the products you offer require insurance? Okay, or maybe it doesn't require insurance, but insurance is recommended based on the business that you run. Accounting and record keeping, this is important. So and not only because I'm a CPA, but because I see this a lot with entrepreneurs that do not have a finance or accounting background, is that they're very diligent about recording all of their revenues because they care about the sales, but they're not diligent about recording all of their business expenses. So what happens at tax time is that they submit all of the revenues. They only submit like part of their business expenses. And so what happens is that their tax liability is higher than what it should be because they were not diligent about recording all of their different business expenses. And we're going to go over that. I have an Excel spreadsheet that I created for this video to help you with that. All right, so technology, software, equipment, supplies, capital, how you're going to finance your business, vendors, and contractors. Now, when it comes to growth, these are some things that happen as once you start to add employees to your organization. And if you can't afford employees, but you need help, maybe consider temp workers, right? Working with a temp agency, expansion planning. If your business is ramping up and you're getting more sales than you can handle as a single or solo entrepreneur, this is something to think about in advance. Like, as your business increases, you can no longer do every single thing, right? Because then your business is limited to you, your strength, your time, and the hours that you're available to work. So you really expansion planning is important so that you can make sure that your business, as your business grows, that you're keeping up with it. Because what happens is if you get too many customers and you can't fill all these orders, then you really run the risk of upsetting your customers because you're taking too long in order to deliver their product or services. So you either have to slow your growth in order to take care of the customers you have currently, or you have to hire and train rapidly so that you have enough people to fill all those orders. Okay, it's like a good problem to have, but it's still a problem that needs to be resolved, right? So if I'm hiring people, do I have job descriptions? Is there think about everything that you would want to train that employee on, and is it enough for full-time work, or is that a part-time worker? What do those hours look like? Do you need somebody just during your busiest time of the day, or do you need somebody Monday through Friday, right? Now, when you hire employees, other things that you have to think about is onboarding training, payroll. How often do you pay them? Do you pay them once a month? Do you pay them semi-monthly or bi-weekly? Do you pay them weekly? And then payroll taxes. So payroll and payroll taxes go together. If you have, and once you start getting employees, you just, honestly, you should, if you don't have one already, get an accounting software because it automates all of those things for you. Even the forms that you have to print off and the dollar amounts, the calculations, everything is automated for you. So training them, what benefits are you going to offer? And that's going to be a cost to you as an employer to offer benefits because you pay a share of their benefits, right? Whether that's health insurance, dental, vision. There's a life insurance, retirement. Let's see, incentives. Are they going to have what kind of holiday pay? Overtime pay is non-negotiable. You'll have to look at the Department of Labor for more information on that. You'll have to look at different types of pays, bonus structures. Are you going to even offer that? Now we move on to the second free or low cost way that you can get organized in your business, which is the business expense and sales tracker. Don't forget that you can download this file for free by going to my Facebook group, Free Q&A with the CPA. This file is located there. And just go over the tabs at the bottom because it is essentially a business like expense tracker, a sales tracker, but I also included how to calculate your home office allocation. So if you're using your home as you have an office within your home or an office space, or it could even be that you use your garage or you have a barn that is your office, your workshop where you do work, that counts as well. Whether that's attached to your house or not, it's still on your home or your property. Business use of your personal vehicle, and then important tax deadlines. Okay, so this is again helping you get started, getting organized. Now I want to say that for the business expense and sales tracker, this is something that you only use if you have not purchased an accounting software yet. There's a lot of different options out there for accounting software, and so if you do have one, I do not recommend you using this manual Excel spreadsheet for your expense and sales tracking, because it would be double entry. You'd be entering in Excel, then you would go to your accounting software and you would enter it in there. You don't need to enter it twice, enter it just once. If you do have an accounting software, and you're doing it by yourself and you're confused about how to use it, or you're not really sure if you're using it properly, or your numbers are messed up, please join my free Q&A with the CPA group, Facebook group. Just search free Q&A with the CPA, and my name will, my face and name will pop up, and you can ask your question there. All right, so let's look at the business expense tracker, the first tab. Now, I've already entered in some things here so that you could see what it would look like filled out. I just started my business in October of 2023. So these are the actual like expenses that I've incurred so far. Something that I want you to pay attention to. So at the top, it has the date, payment category. What is the vendor, merchant, or contractor? Why did you make this purchase? Now, how did you pay for it, the dollar amount, and if you have backup or documentation saved or filed. And by examples of documentation or backup, that's going to be receipts, invoices, W-9s, contracts, bills of sales, any of those things. And it can be in printed form, it could be email form, an online invoice, it doesn't matter, as long as you have it and it's saved somewhere where you can access it, if ever you get audited, or if you have a bookkeeper that or an accountant that you've hired. Now for the payment category, so let me just kind of break down, because I made this with a CPA or an accountant or a bookkeeper in mind. And then even like tax time, like if you needed to take this and give it to somebody who's doing your taxes, setting it up in a way that would be beneficial for them to understand all of your purchases that you've made. So with payment category, this is a list of what type of payment you've made. Okay, so did you pay your cell phone bill? Is this a charitable donation? Did you need professional cleaning fees, commissions? It's a very long list. I tried to include things that would come up in a general overview of different types of businesses, but there could be something I missed. So I also left miscellaneous and unable to categorize. So basically you would look at whatever your charge was, you would look through the list to find out what category it falls under, and you would select that. So I purchased a security system for my brick and mortar, location. And then you would put the vendor would be ADT, right? Whoever it is on the invoice, you would say exactly what I said. I purchased a security and an ADT security system for my business office / brick and mortar. And then how did you pay for this purchase? Now, the reason why I put this in here, and there's 4 options: personal debit card, personal credit card, business debit card, and business credit card, is so that it's a way to point you to where that invoice, or that if you need to do a screenshot of the payment on your statement, like where could you find that? This is going to be the dollar amount after tax. If you've saved or filed that backup or documentation, have you printed it out? Is it a folder on your Google Drive? Like, where is it? Do you know where it is? If you don't have something organized, take care of that right now. And it's because it's so easy for all of the expenses to build up that you forget them. And then it's hard to keep track of them, because you're like, when did I spend that? I knew I bought it. I don't remember what month. This is easier to do when you're just keeping up as the expenses come in. Now, another reason why I have this payment category here is that if you are turning this over to a tax professional or an accountant for bookkeeping, that they can quickly determine how much money you've spent in each category, which is important for tax time. And then also someone with an accounting background is going to be able to tell what type of expenses are allowed, which ones are not allowed. This list feeds from the payment category tab down here. And usually I would hide this when I would share it with others, but I'm not hiding it. That if you need to make a change to any of the titles, you can do that to tailor it for your business. All right, so let's look at the sales tracker. So these are made up sales, made up dollar amounts, very simple and straightforward: date, customer name, customer contact information, items purchased, payment type. There's so many different ways to accept a payment. And so the reason why I've put the different types of payment types here is because that will again help you know that you have to go to PayPal in order to download your statement. If you become a business, you have to operate as a business and set up business accounts in order to facilitate your sales process or your operations. Now here I have just the gross sales amount, how much tax is supposed to be charged. So this is a formula. I'm taking this cell and timesing it by 8.25%. In order to know how much tax you should be charging, you have to go to your state's sales tax website in order to determine that. They usually have something where you can put in your address or the address of your business, and it'll tell you what the rate should be. A few things you have to keep in mind when it comes to sales tax is that sales tax belongs to the state. So you charge it to the customer, but it has to be turned into the state. Another thing is that there are organizations or businesses or types of services or products that may be exempt, but you have to research that and look that up to make sure that it's tax exempt. Okay, so just because somebody says, I don't want to pay sales tax or shouldn't be charged, if they truly should not be charged, they should have some sort of exemption paperwork, and that should align with your state's rules and regulations concerning sales tax exemption or tax exemption. I've also put a place in here for discounts and allowances and returns, and the formula, enter these as positive numbers because the formula will subtract it. Okay, so if you're giving a discount, if you're making an allowance because one of your products was defective or had a defect on it, you can enter that here. Here I have a $50 discount. Now, if there's a return, you also have to return the sales tax that's associated with it, right? So they return the product, and so the product plus the sales tax has to be returned to the customer. Okay, let's move on to your home office. So not many people know this, but if you regularly use a part of your home, and that's whether that's in your actual home or apartment or a separate building / structure on your residence, so garage, studio, shed, barn, for conducting or meeting with clients, you can allocate some of your home expenses or some of your rental expenses to your office, right? Because that part is actually your business. And I have that here what the IRS states. So your home must be the principal place of your business. However, if you have a separate office at another location, but still use a part of your home substantially and regularly, you can still qualify. Okay, so whenever we're talking about tax, it's always important to point back to the authoritative source, which would be the IRS. So here I have the IRS's website for publication 587, detailing the business use of your home. So this is where I took the information from. All right, so it's very easy to calculate. All you need to know is the square footage of your home office, studio, barn, garage, shed, whatever, and then the total square footage of your home. Then you're going to divide the square footage of your home office by the total square footage of your home or residence. And that percentage is going to be what is allocated to your home office. Here on the spreadsheet, what you're going to look for, you see this yellow bold bordered box, that's data you have to enter. So let's say the square footage of your home office is 200 square feet, and the total square foot of your apartment or your home is 1,200. So see here, it's your home office. This is the calculation exactly like it is on the left-hand side of the spreadsheet. And that's going to be 17%. Okay, so you can do 17%. If you want to be on the conservative side, you can do 16.67%. So you pay $12,000 in rent. $2,000 from the 12 can be allocated to a business expense. You either rent your property, right, that you live in, or you own it. So if you own it, you would not put in rent, you would put in interest. So say interest for the year was 3,000. Okay, so you can write off 500. 500 can be a business expense. Real estate taxes. If you rent, you don't have mortgage interest, you don't have real estate taxes. You wouldn't have any depreciation expense, right? Because that would be on the home. But you could, whether you rent or you own your home, you could have losses from a disaster that happened in your area. Okay, so you could have a loss that wiped out all of your business equipment, and you lived in a rental apartment. Okay, so for insurance, this could be renter's insurance, this could be homeowner's insurance. Repairs, technically, if you're a renter, you shouldn't be repairing anything that's coming out of your pocket. It should come out of your landlord's pocket. So this would be for an owner, a homeowner. If you are using your personal vehicle for business use, you can allocate that business use. Okay, so remember, anything that's a yellow bold bordered box is data that you have to enter. All these other things where you see the div, the error message, it'll remove once you actually enter in your information. Okay, so there's two options that the IRS has for you in order to document your expenses when you use your personal vehicle for business. Option one is that you can document your business miles, and you just take the IRS's standard mileage reimbursement rate, and that rate is supposed to compensate you for wear and tear in your vehicle and all of those other additional expenses that you might have occurred. Okay, so this is like a flat standard mileage reimbursement rate, but you do have to log your miles. So option two, you can just keep track of all of your expenses and use the calculations below to find your allocation. So this is how it would work. Okay, so each year you want to document your starting mileage on January 31st. And if you don't know your starting mileage, if you've been doing regular oil changes, that should hopefully help you back in to your starting mileage on January 1st. And then your ending mileage on December 31st to find out your total miles driven. So once you determine your total miles driven, then what you're going to look at is your business miles. So you still have to keep a log. You still have to keep a mileage log. 25,000, which represents your business miles in your personal vehicle, divided by your total miles driven, which is going to give you a percentage. And this is 38%. Okay, so 38% of the total amount of money you spent on gas, oil changes, repairs, tires, insurance, registration fees, depreciation, lease payments, if you're doing lease payments on your vehicle. Now, why lease payments and not car payments? So the only time you can use your car payments as a business expense is when you purchased the vehicle in your business's name, and it is only used for your business. That's the same thing as for the home office. Why mortgage interest but not the mortgage? The only time you can take the mortgage as a business expense is when that building was purchased in the name of your business for use by your business. Okay, but if you're renting, then the lease payments on a car or your lease payments for an apartment, those you can use in the allocation. I'm going to show you how to use this and how to fill it out. All right, so again, let's say our starting mileage, I have an older vehicle, so my starting mileage was 90,000. Okay, on January 1st, and on December 3rd, I'm at 110,000. So I drove a total of 20,000 miles in the year. And then I'm just going to say that 2,000 of those miles belong to my business, which means that only 10% of the miles that I racked up on my car can be allocated to my business. So say for gas, I spent a total of $3,000 on gas. So 3,000 times 10% is 300. That's going to be the allocation for the year for 2023. Oil changes, I changed my oil 3 times. It cost me $100. That's $300. So only $30 can be allocated to my business. I just had to do repairs because my car is old and I needed to change out several things that cost me $2,000. 200 can be allocated. Okay, so you see, even insurance, your car insurance, your registration fees. Now, to figure out depreciation on your vehicle, what you'll need is you'll need to go to Kelley Blue Book's website in order to find the value of your vehicle when you started using it for business. So you'll have, in order to do that, you need to know your VIN numbers. You need to know the date you started using your personal vehicle for business use, and then that mileage when you started using your personal vehicle for business use. So these three things you need in order to determine the value of your vehicle when you placed it into business. Now, as far as calculating depreciation, if you're racking up a lot of miles on your car, I would do this for sure. But if you're not doing a lot of miles, like for instance, my business is a CPA firm, most of my business is done online virtually. And so I'm really not driving to see customers, or they're, I'm not doing a lot of driving that's related to my business. So I don't plan on even calculating the business use of my vehicle, because for me, it's not worth it. And so I would say you just have to determine whether you want to go through the hassle of calculating this, whether it's worth it or not. For me personally, I don't think it's worth it right now with my business. It may be in the future, but if you are doing a lot of driving, if you're going to see customers, if you're driving to pick up supplies, if you're driving to go to a conference or training that's related to your business, so that you can excel as a business owner or learn something different in your industry, then for sure I would do this. Now let's move on to the third free or low-cost way to get organized in your business, which is listing out your tax deadlines. And then the last tab that I have on here is going to be tax deadlines. One of the benefits of having an accounting software is that all of this is automated. So once you put in your business address, your accounting software does the heavy lifting with figuring out payroll taxes, sales tax, and everything like that. However, you still have to know the tax deadlines, and then you also have to know how, if you're only submitting a form, are you submitting a form and payment? Those are things that you have to know. So if you are a solo entrepreneur and you don't have any employees, your tax deadlines, your list of tax deadlines is much shorter than somebody who has employees. There's a lot more things you have to worry about once you take on employees. So if you do not have a bookkeeper, you cannot afford an accountant or a CPA, you have to do this. Okay, this is important. Make a list of all of your tax deadlines, and then print that list out and keep it over your computer or somewhere that you will remember it. Save the dates in your phone, put reminders like 1 week, alerts a week before, a month before, so that you don't miss these deadlines and you don't get any penalties. You have to know them. If you don't know them, you need to go and find out today. Do not delay. Didn't mean to make that rhyme, but don't delay. Because delay means that you might miss the deadline, which means you might owe back taxes and penalties and interest, and you don't want that for your business. I put a few here. There might be more based on what state you're living in. There might be additional requirements, but this is a basic list for somebody who's a solo entrepreneur. Okay, and then so what you want to do is put in the month and day that they're due, the tax authority. This is important so you know what website to go to in order to pay those taxes. And then the description of the tax. So the description of the tax and when it's due and any important notes. All right. If you do have employees, your list is most likely going to look like this. There's going to be way more deadlines that you have to abide by. So everything that's in blue is payroll related. So there's state unemployment tax. There's Medicare, Social Security, and federal unemployment tax. You also have to do W-2s and 1099s. You have to do annual and quarterly filing for your employment taxes. There's more deadlines when you have employees. And so if you have employees and you have not been on top of it, this is a good start off list for you, but make sure you have to edit this and update it and tailor it to your business. Sometimes when there are taxes that have to be paid, you'll get a letter from that tax authority stating that, hey, it looks like your business qualifies, to be taxed for this item, and these are the deadlines, this is your account code or whatever. But that's not always the case. Sometimes you have to be the one in order to go and set up your own account and get your account ID and then find out what the schedule is. Okay, now let's talk about the fourth free or low cost way to get organized, which is time blocking your to-do list. All right, guys, so this is such an easy step because number one, we all have to-do lists. Personal, for our work, for our business, for our marriage, we all have to, for our children, we all have to-do lists. And then we also have a calendar, whether we have it hanging up on the wall or we use the one on our phone, we all have a calendar. What I want you to do is I want you to marry your to-do list and your calendar. That's what this step is about. And it's very simple and straightforward. You're going to look at your to-do list and then you're going to review your calendar and decide time on your calendar, a date and time on your calendar where you're going to dedicate to each item on your to-do list. Now, of course, one, you need to give yourself grace, right? Because things come up, things happen. You're more than just an entrepreneur. You have a family, you have a job, you have different things going on in your life. Understandable. But what I want to encourage you to do is whatever time you set on your calendar to do the various items on your to-do list, to really focus and not use that time for other things that are not building your business, right? So if you say on the 30th, this Saturday, from 3 p.m. to 4 p.m., I am going to finally work on building my website. And then that's what you do from 3 p.m. to 4 p.m. this Saturday, the 30th. You sit down, you build your website. Now, you may not complete your website, but you actually work on it instead of just leaving it on your to-do list and it never gets done because other things keep on coming up. Okay, so that's essentially what we're doing. We're marrying our to-do list to our calendar so we get things done so that we're consistent, we're committed, and we're focused. Friends, you have made it. Let's talk about the fifth and final free or low-cost way to get organized in your business, which is getting an accordion file folder. All right, so this final step is another easy one, guys. Nothing deep, nothing complicated. What I want you to do is go to the store and get, if you don't have one at home, and get you an accordion file folder. This should cost you $10 or less, and I want you to get one that's at least 13 pockets. And the reason being is that you're going to use this accordion file folder in order to file all of your business expenses and your sales invoices. So if you are manually printing sales invoices or receipts, you're going to label each pocket the months of the year. That's why I need you to get one that's at least 13 pockets. 12 of them are dedicated to each month of the year. And then that final pocket, a copy of your tax return should go in there after you file your taxes. If this is your first year of business, this is where you should keep your EIN letter from the IRS. This is where you should keep your formation or incorporation letter when you started your business so that would come from the state. So important documents, W-9s, contracts, those sort of things, you want to put all of them together in this accordion file folder. This will help you keep things organized and at least help you save all of your required documentation and backup that you would need for tax time or in case of an audit. And so if you want to, you can always split this out into two accordion file folders where you have one dedicated to expenses and another one dedicated to customer invoices. But my suggestion to you is to keep it simple. So the most simplest way for you to keep track and keep your files and documents organized for your business, that's the way that you have to do it. If you don't care about doing things manually, or you don't want to, you don't want paper. I know people that don't like to print things and they want everything digital, they want everything scanned. Then create this in Google Drive, create this in Dropbox, create it somewhere in whatever electronic form that you use. But it has to be created, right? You need to keep track of your business expenses. You need to keep track of your sales and your customer invoices, so that when you're doing your taxes, when you're entering things into the the business expense and sales tracker, when you're turning things over to a bookkeeper or to an accountant, you have at least saved all of the backup and documentation that you would need to build your records, okay, or your financial statements. Thank you so much for watching this video. Thank you for staying to the end. I hope that it was informative and helpful. If it was helpful, please comment below and tell me which parts were the most helpful so that I can use that feedback in future videos that I create. Also, if there is a topic that you'd like me to cover, please put that in the comments below. I would really appreciate that. If you have more questions, you can either put them in the comments here on YouTube, or you can go to my Facebook group called Free Q&A with the CPA to post them there. Finally, if you enjoyed this video, please like, please subscribe, please share. I really appreciate you for tuning in. Thank you so much, and we'll see you in another episode of Free Q&A with the CPA.